Hello. Welcome to my channel, my dear friends. My name is Avilash and I'm a trader next door. In this video, I'll be analyzing the chart of euro, dollar, euro, USD. So if you're watching my videos for the first time, you can subscribe to my channel for regular market analysis. So let's get started. So the market is open, and after the market opening, we can see that DXY US dollar currency index is showing some signs of recovery, but there is not much volatility in the market, and overall the levels that we have discussed in our previous video are still very much intact. If DXY shows good signs of recovery during the European session or US session, then we will have 107.70 to 80 as the next resistance for DXY, which was previous support for the market. So the previous support will now act as the new resistance, and in case the selling pressure continues in the market, then 105 will be the next big support. In a previous video, we have already tried to understand the logic behind the support of 105. So if you're looking for detailed analysis, please watch the video that I uploaded on Saturday, because I do not want to repeat the same stuff and bore you again. So apart from these two levels, you can also see that we have a bearish flag also visible on the chart of DXY, and as we all know, the DXY is right now going through a correction right now. So yes, if DXY breaks the flag, then there will be further recovery upside on the chart of euro USD. So keep your one eye on DXY. Okay, so now let's move towards the chart of euro dollar, euro USD. As we have already discussed, know it very well that it's standing at the resistance zone right now, but still I'll request everyone not to take any sell position right now, because you can see though market is standing at resistance, it is not going down. And if you look at the chart carefully, and you can see that DXY what bearish flag here, you can see almost a bullish flag here. So this is not the right time to go for a sell position, okay, at least according to my analysis. I can be wrong as well. After all, no trader is 100% accurate, but still from my experience, I believe that taking a sell position can be a high risk here. After, we must follow the trend of the market. Trend is a very important thing. So what should be a strategy then? First of all, as you can see, there's not much volatility in the market right now. Just wait and watch. Okay, in case market comes down to the Fibonacci 23.6% retracement level, you can go for a buy, because in this type of market, I think that buying at retracement can be a very good opportunity, because market is bullish. So market will try to bounce from every retracement level, and in this case, Fibonacci can be a very good tool for us. So I will request everyone to use the Fibonacci tool, okay, and just mark these levels: Fibonacci 23.6%, Fibonacci 38.2, and Fibonacci 50%. Keep in mind, Fibonacci 23.6 or 0.236 is not a very strong level. So in case market breaks also the first Fibonacci level, okay, don't be surprised, because the good levels are 0.382, 0.50, and 618. 618, okay, 618 is already we know that it's the level of level of importance, 1.0000. So right now our important levels for the day are Fibonacci 38.2 and Fibonacci 50% retracement level. What is the Fibonacci 38.2 level? It's 1.0200. This is our first important support for day trading purpose. Okay, keep in mind, if you're positional trader, swing trader, then this level is not for you, because your trades last for a couple of days and weeks. And whatever we are discussing right now, okay, it is mainly for the day trading purpose only. So this is the first support from where you can expect the market to bounce. So during the day, if EURUSD comes down, dollar starts trying to recover, then you can expect the market to bounce from this level. If market bounces, you can go for a buy. And in case market slips below this level, then you have Fibonacci 50 level, that is 1.0150. This will act as the next good support for day trading purpose. Keep in mind, day trading, I'm repeatedly using the word day trading purpose only. Okay, and if Euro USD doesn't come down at all. If you see that Euro USD is not in a mood of coming down, then yes, high chance of market bouncing from here. But see, you must understand one thing very well. If you use Fibonacci, that this is not a very strong level. Okay, these levels are better in comparison to the first level, that is 0.236. so the volatility will always play a big role. Okay, then only you can decide. After all, it is the main difference between a gambler and a trader. A trader doesn't trade all the time. Okay, in my previous video also I said one thing, that you don't need to trade often, you need to trade well. So never forget that. And in case market shows breakout, okay, if market breaks this level, you can go for a buy, but be careful. Okay, be careful, because 1.036 above this level, okay, you need to be careful, because see, we all know it very well that stop loss hunting, false breakouts are bitter realities of the market, or dark side of the market. So to protect yourself, okay, so protect yourself, follow proper risk management during this day, especially during the European session or US session. If you see a breakout scenario like this, okay, you can go for a buy position, but do not forget that as a retail trader, our capital is limited. We cannot gamble with our hard-earned money, so think wisely and then take the position. Okay, so this can be a breakout level for us if market shows a breakout kind of a scenario. Okay, and in case you see that market is going up, but if the size of the candle is not convincing enough, if the size of the candles are like this, okay, then avoid taking a buy position at the breakout also. See, for a proper breakout, we need volume. Volume means the size of the candle should be good enough. Okay, so without proper volume, it can lead to a false breakout as well. So be careful. On the video of the goal also, I mentioned one thing very clearly, that keep in mind the main difference between a professional trader and a retail trader is that we retail traders mostly focus on a profit part. Whenever we we get a position in the market, we simply imagine things. Okay, I'll make this much profit. Okay, if I get this much pips, I can make this profit. But we hardly think about the stop loss part. Okay, we simply put a stop loss. Just keep in mind. Okay, never forget. Okay, and try to analyze also. That see, we can only expect the profit from the market. The profit is not in our hand. The only thing that a trader can control is the loss, and this is the main difference between a professional trader and a retail trader. Retail traders do not control the losses, whereas professional traders determine the loss from before only. As a result, they are always prepared for their loss. Once your loss is under your control, okay, once you start having control over your losses, okay, you will be unstoppable. Okay, that's it. Bye bye, take care.